All right, Roger.
All right, great. Thank you. Good morning, everyone, and thank you for joining us for our weekly webinar. I'm Roger Boutler, the CEO of the Nova Scotia Association of Realtors, and today we have with us Jim Decoste, who is the Acting Provincial Director for the Canadian Mortgage Brokers Association. Welcome, Jim.
Thank you.
Jim is raised and lives in Antigonish. He has 20 years of experience in the financial industry as a personal financial advisor, helping clients with their personal insurance and investment planning, and still practicing through Hub Financial. He has 15 years experience in the mortgage industry and is currently the owner of Dominion Lending Center's Maritime Mortgage Group, with main offices in New Glasgow and Antigonish, but they have brokers throughout Nova Scotia, New Brunswick, and Prince Edward Island. And Jim is the proud father of two and is a grandfather, although you would never tell by looking at him that he's old enough to be a grandfather. So there you go. So Jim, welcome.
Thank you very much. Thanks for having me on.
Oh, you're more than welcome. Thank you for agreeing to do this. So I thought we might get started. You and I, prior to being live here, we're saying it might be of benefit to the audience to perhaps explain why someone would use a mortgage broker rather than go through the traditional bank, whether it be RBC, Bank of Montreal, Scotiabank, etc. So
Yeah,
I'll leave you to explain why we should use a mortgage broker.
Well, it's my favorite topic, really, because we want to talk about ourselves, right? Like I was saying, we were talking about a little bit earlier ago, is that not everyone really knows exactly what a mortgage broker does. A lot of our time when we're working with clients is educating our clients, of what mortgage broker does, how we can help them, and so forth. And then also with the public, such as, working directly with realtors and so forth. Really, what a mortgage broker is going to do for our clients and the realtors is give them options. Especially, and it's important in a time frame such as what we're going through right now, or any time, is having a wide variety of different options. Mortgage brokers, like, we have access to over, depending on the mortgage broker, maybe the company they work with, but I say we have access to about 30 plus lenders here in Atlantic Canada. Some of your larger banks, such as, we deal directly through TD, Scotia, some of your other target banks, credit union partnerships, and then a wide variety of different monoline lenders. And with each of these lenders, they may have a wide variety of different products for that client. So we're able to kind of access a client's needs based on where they're currently at with their credit, their income, their first-time home buyer or second, or the property they're looking for. And then from there, we can kind of give a suggestion or a solution for that client of where we would send them for a mortgage product or a lender, what kind of rate they'd be looking at, or if they don't qualify, which it happens on a regular basis. Unfortunately, you get people shopping and they don't qualify. We're able to put them on the right track. And I think that's what a mortgage broker does really well compared to maybe some other financial institutions. And I'm not knocking financial institutions, but we here directly is building that relationship with a client to help them get on the right path and give them the steps so that they know what they have to do to qualify for a mortgage.
Okay, excellent.
Yeah.
So it's just more than just approaching a mortgage broker and saying, hey, I need a mortgage. You actually help folks go through the process of perhaps you might want to do pay off some debt first, and then that sort of thing. Kind of a financial advisor per se, a little bit.
Yeah, exactly. There's a lot of times we'll be, sitting face to face with a client and they were turned down somewheres, and or they just come to us directly and we look at their situation. And like you said, it's a key one is, you might have a client that maybe their credit score is a little bit low based on their situation, and we review that. And it could be just because of the way the credit looks. They may not have bad credit, but maybe it's a suggestion saying, if you pay down the, your credit card or line of credit a little bit, your score is going to increase. And it's going to put you in a better situation, or you have to do this to get your debt ratios in line, or whatever. But one of the biggest key things is, when we're working with our realtor partners, we want to talk to them just like that, that a broker is actually a business partner for yourself and a tool for you guys to utilize. Because we have access to a wide variety of lenders, you know, we're going to know if this client is going to fit this lender's guidelines or their product shelf. Some lenders may not have, maybe, you know, it's a client buying a mini home, for example, that's not going to fit that lender's guidelines that we'd send somewhere else, or it's a self-employed client that there's not a program maybe put in place for that client, right? So having a wide variety of different lenders, we're just, it's the option for our clients, but for you guys as well. And having more options is just going to create more sales for realtors, right? So.
Sure, you touched on something there before we get into some of the more specific questions that I have, but you did touch on something there that I think is key for new realtors coming on, and probably some of the seasoned realtors as well. I know that a lot of their clients are self-employed. I mean, that's kind of the backbone of the Nova Scotia economy is entrepreneurs and people who are self-employed. And I know from, you know, previous life, going to the bank, if you don't have a T4, or, you know, you're not employed by a company, that sort of thing, if you're going with your own, you know, your business, and you're getting paid from that, it's not necessarily the same. Well, it isn't the same process of getting approved for a mortgage. So I suspect having a mortgage broker to walk you through that process, and partnering up with a realtor probably makes it a heck of a lot easier for those that are self-employed.
Yeah, it does for sure. You know, there's definitely different lenders that have a better appetite for certain clients. So they may have a program for self-employed or a stated income program through a different insurer. So knowing those avenues is important as a broker to be able to do it. That being said, you know, I stress all the time to, you know, our clients and our partners that we work with, you know, we can only do as much as we can do as well. So, you know, we'd love to say we can get everyone approved. It doesn't happen. But if we don't, at least we can kind of put them on the right path. And your best option is if you know, chances are if a mortgage broker can't get it approved, it's probably not going to get approved.
Right. Well, that's a good takeaway. So let's talk about our current situation and COVID-19. You know, we're all dealing with it. It's definitely had an impact on our industry. So let's talk about current mortgage conditions, the rates, and has the current situation or the COVID-19 pandemic placed any restrictions on, you know, obtaining a mortgage?
Okay, yeah. So let's there's a fair bit of information in that there. So let's look at rates, because I know everyone's concerned, or rates is always a key topic, right?
Sure.
So, you know, when we seen prior to COVID-19, rates were, you know, they were dropping going into 1st of March. You know, the market was pretty good and stuff like that. And then, of course, we got hit with COVID-19, and there was restrictions put in place. Banks' appetite for mortgages were a little bit changed, and they were kind of nervous. They didn't know what was going on with everything. So we seen rates start climbing back up, and that was basically trying to slow down applications being pushed into their funnel. They were handling a lot of deferral requests and stuff like that. There was a lot on their back end support they weren't able to deal with, and really they didn't know what was going to go on. You know, the major effects going into this. So, oh, did you lose me?
No, it's just a little choppy, but I think you're back on now.
Okay, I got a notification my speaker wasn't working probably. So now we're starting to see that, you know, rates, after we kind of started seeing where things were going, lenders, they've been dealing a little bit better than probably maybe they thought. And so we're starting to see rates coming back down. The appetite for new applications are there, and they probably put you know, their back end support dealing with some of the COVID-19 issues, and the deferrals and requests for clients have been put in place. So there's some really good rates out there right now. Rates are decreasing. I think we'll probably continue to see them dropping gradually, and maybe starting to, we're getting, like right now we've seen a special out there with one of our lenders for 2.29 for a 5-year fixed rate that was just put in. You got some lenders that have different specials out there. Some of your larger chart banks are going to come out with some specials. We got another lender that just offered a 3-month deferral program, interest or not deferral, but an interest-free program. So the client would pay for the principal portion, but their interest would be taken care of, and that's not added on the back end of the mortgage. That's just they're giving that off. So that
you're knocking down your principal right off the get-go.
Well, yeah, you could use that extra money maybe to pay down that debt, or other solutions for that money that you might want to save. But so you're seeing that they are coming into the spring market. They're trying to pick business back up, right?
So what about? I've heard, like I've attended, as most people have, a whole whack of webinars, over the last little while. One in particular was they had the gentleman on from RBC, and he's saying that that they are willing to work with clients, who have existing mortgages, and working with folks coming in. But then you hear on the news that the banks aren't dealing or willing to deal with the public at all. What has been your experience, over the past 8 to 9 weeks, in trying to get folks mortgages? Are the banks, like, what are you seeing, I guess? Right? Because we're getting two different stories.
So let's look at it from two different points. One, let's look at it as the working with clients on a deferral processing. We're hearing that all the banks are, they're there trying to help any clients that currently have mortgages and are maybe find themselves temporarily laid off because of COVID-19 or financially stressed. Pretty much all of our lenders have put some type of program together to assist those clients. So they're there working with clients. They're trying, we know what kind of major issues that we've run into if they didn't do this, right? If you get, arrears showing up on mortgage arrears or foreclosures and stuff, it's not good for the industry at all. So they know that. So they're doing their best to work with the clients as much as possible. And thankfully, our government has worked with our financial institutions to help with that and stress the importance of that. So we're seeing that there, right?
Good. For
new business, underwriting is key, and some of the lenders have definitely made some changes to their guidelines. I can't say it's 100% business as usual, but at the same point in time, we're still getting mortgages are going through. Like, we have a number of applications that are funneling through, and it's really going to be underwritten case by case depending on the file itself. And as a mortgage broker or your broker at a bank are going to be the first point of contact to see if there's going to be any challenges with this file starting off before it even gets to the underwriting department, right? But yeah, no, banks are still in the business. They still want business flowing in, but they just want to make sure it's the right business that's going to work right now.
Sure.
Example would be, of course, if a client called me today and they said, we're interested and we've been shopping looking for a house, but I'm currently not working right now. I'm going to gather a little bit more information, as in what kind of industry are you in? Do you know when you're going to be returning back to work? Is there a timetable? If there's no timetable and the client doesn't have a lot of reserves for income or savings, then it's probably not going to be the right time for them to buy a house.
Sure.
Right? So, and I'm going to explain that.
No, and then that makes sense, I guess. What I found, I guess, heartening is when we were preparing for this webinar on Monday, we were kind of talking, we crunched some numbers on our end, and, everyone was expecting sales and whatnot to fall off a cliff. Now, they've certainly fallen, probably 60%. But I mean, there's still activity, and you had said on your end as well, people are still applying and going and applying for mortgages and looking to buy homes. So I guess that's if there's some silver lining, it's that it really hasn't fallen off a cliff. There's still activity, and you're seeing that on your end.
Oh yes, like we're getting calls every day for people looking, for home purchase. I just had one just before our webinar started at 9:45 here today for a person wanting to set up an interview, looking at buying a home, right? And so some of it's going to come down to a little bit more coaching with their clients, getting them prepared if they're not ready right now. hopefully, looking at the, the client, maybe they're currently working and, they don't expect that their job's going to stop. And with those files, if everything fits, you get them ready and push them through, right? So that's good. It's the ones that are going to be kind of in that fringe area that, they're going to be planning on going back to work maybe in another couple of weeks. And I think as you and I were talking earlier on the week was, with the plan that Nova Scotia hopefully is going to announce this week in regards to reopening back things up, will give us a little bit better idea too, and our clients of, when are they going to be back earning a paycheck, right?
Sure.
Yeah.
So sorry, go ahead.
Well, the guideline probably right now would be, for most lenders, we're going to need a current pay stub and job letter for those clients who are purchasing with the 5% down insured guidelines, right?
Mm-hmm.
They are going to do a job confirmation for employment check with a phone call. A lot of times, a lot of lenders will, or make sure that the pay stub is current dated, right? And from there, if everything looks good, then you're fine. For clients, maybe your pension clients and all that, there's nothing changed if they're upgrading, as long as if they have a house that they can sell, they're good. And then you're looking at your other clients, maybe your self-employed clients who have a fair amount of net worth or good savings, but maybe if their employment was disrupted, well, they could still probably maybe qualify depending on how strong of an applicant they look, like how good is their credit. So there is exceptions being made, even if that client may not be working. So it's always a case to case. It's always what I would suggest is have your client contact a broker, review their file, and then we can kind of advise them, is this the best time, or are you going to have to wait a little bit?
Right. Well, it's certainly, I would think with interest rates, I wrote it down here, with specials on at 2.29%, that's almost free money. Let's be honest. I mean, those are pretty low interest rates. So, if you're thinking about buying and you have good solid finances, now would be the time to pull the trigger, so to speak, I would think, because I don't think rates will go much lower than that. I mean, my goodness, that's pretty low.
Yeah, I can't see it besides maybe some specials or 3 years fixed and stuff like that, right? You might see a few of them go over here, but no, it is great rates right now. Yeah.
So you had mentioned earlier about deferment options. So are you seeing a lot of that? And do people use mortgage brokers to negotiate the deferment payments with the banks or the other lenders? And is that a good idea for folks at this time?
So when it was first announced that the government was asking, CMHC had put in for insured mortgages to be deferred, that first week, and we made, a lot of brokers put notifications out to our clients, let them know that, this was available and stuff like that. I spent pretty much the first week just handling phone calls and emails just on the deferral process. Clients asking me about it and stuff like that. There's, a lot of nervous clients out there, which is understandable. If your income just stops and you don't know where money's coming in, you get your bills still. So what I was suggesting to clients at the time is looking at your personal financial situation as if you can handle your mortgage payment as if nothing's changed. So you have a reserve of money, savings. If one spouse was currently working, if you had EI income coming in or other emergency benefits coming in, my suggestion would be to continue making your payments as if you needed to, right?
Okay.
It's not a free deferment. It's going to be added on the back end. It's going to cost you in the long run. But a lot of people were misinformed or under the understanding that, geez, everyone's doing this and it's free, right? So they were all trying to do it, right? Then our lenders started requesting us to maybe have a little bit longer of a conversation with our clients saying, because it also consumed a lot of time for our lenders back in, because they were getting thousands of calls on a weekly basis, right? That they never had to handle before. And so that took a lot of resources for them. But we're starting to see that has kind of started to slow down. We're not getting that as much. So I think the initial wave of people had to really do it, and now people are kind of maybe had that conversation.
Right.
So, yeah.
Well, there's no such thing as free money, I guess. So in the end, it would cost those that took advantage, I guess, of the deferred payment, they're going to end up paying a little bit more or the same at the end of the day.
Well, that's right. And, it has, it's there for a purpose, and it's for some clients, it definitely makes sense.
Sure.
You, basically you didn't have the reserve, you live in paycheck to paycheck, maybe you're a single parent, single person, maybe both of you were laid off. Well, yeah, you don't want to run, exhaust your savings that you just a little bit that you have, and then
Sure.
have no backup plan. So that made sense, right? So yeah.
No, that makes sense. So appraisers, sorry, you and I both deal with appraisers probably on a daily basis, or our members do. So our appraisals, sorry, still taking place, and what does that look like now? Do you have a feel for that?
Yeah, so we work closely with a couple different appraisers. A lot of times we had to work through appraisal ordering companies, such as Nationwide Appraisals and Brookfield Appraisals. And I was, really pleasantly surprised of the, how they did the workarounds COVID-19, and with being able to go in the isolation and social distancing, and being able to still get the appraisals done. Lenders gave them the, the workaround of basically allowing them to kind of go do the appraisal, not having to necessarily enter the house. They could get pictures from the client at the time while they were in the house, maybe walking around with their camera, taking a video of the house at the same time to get the valuation and so forth. So it's still working really well. I talked to one of our close appraisers here in Antigonish the other day, and asked him if he noticed any major changes to his business. And he said, besides there was a slowdown, of course, at the end of March and in the 1st of April, but he was still fairly busy. There's still quite a bit on the go.
Okay.
There was no dead stop or anything like that. And he hasn't really noticed at this time, like I asked him in regards to valuations, of course, if he was noticing any major issues in valuations yet. And he said he hasn't really seen any disruptions in the valuation process, or property values dropping any significant amounts. So business pretty much as usual, besides a few little tweaking in regards to how they get their they go on a property and stuff like that. I had another one, a story where a lady took her ladder from Halifax to go to Truro to be able to look in the windows of a property.
Well, I guess.
Yeah.
So I guess sort of segues into my next question. Has COVID-19, other than the obvious, impacted the mortgage brokerage industry or slowed it down in any way? Like, has it disrupted? Like, I know when I used a mortgage broker not that long ago, I never met the man. Like, we did everything online. Now, I don't know if that's the norm or not, but that was my experience. So has it impacted the industry in that sense where, you've had to adapt to and use technology more, or were you always using the technology?
Yeah, so, I think COVID-19 has sped up the technology process for a lot of different industries and lenders. Now, the good thing was, through the mortgage broker industry, we're working with clients, and same as you guys, you're working with clients that are all over the country. You're getting calls from clients from Ontario looking to move to Nova Scotia, or from out west, and so forth. And so we're doing the same thing. And, unfortunately, you can't meet with every client. The process, it has to be moved fairly fast. And so we've been building in technologies, and I think I would be safe to say most brokers and brokerage companies are doing the same. They see that technology is key when it comes to fast processes. Our lenders have worked really well in order to, some lenders that weren't accepting like digital signings prior to COVID-19 have sped up their compliance departments to allow digital signings. Yeah.
Excellent.
So an example like TD prior to COVID-19 wasn't allowing digital signings, and now they put that in place. And I don't think they'll change that process. They'll see how it goes.
You took the words out of my mouth. I was going to ask, do you think once we get back to our new normal that they will continue to allow the electronic signatures, or will they revert back to their previous practices?
I think as long as it's being used properly, as in they get a clear view of that, yes, they can see the trail of the digital signing, right?
Mhm.
That they'll be happy with it, right?
Okay.
Compliance is always going to be an issue, but we can also see that other lenders were doing this. So they were probably had it in their back burner saying, yeah, this has to come on board. Because personally for myself, that makes a difference too, is the easeability for me dealing with a client. Can I just send them out a digital package to be signed, or do I have to get them to print it, sign it, scan it back? That all takes time and it frustrates clients. So lenders are seeing that too. I think that COVID-19 is going to change the perimeters around how business is done, not just in our industries, for you as realtors, for, lawyers, especially, as well as appraisers. And I don't think we'll ever see business go back to normal as normal was.
No.
Right. It is changed now. Right. So
I would agree. I know there's always been this dream, I guess, in the industry by some folks to have, trading, being able to buy or sell a home as a seamless process. And, you can buy and sell stocks online for far more than you can a house in some cases. I don't have that kind of money, but some people do.
yeah.
And never have to leave, their basement sort of thing. But yet, in order to buy a house, you got to meet with, the appraiser, the inspector, the mortgage broker, the bank, the lawyer, and quite frankly, it's a painful process, and some realtors are really good at walking their clients through it, and some not so much. And I personally think this whole thing is going to disrupt the industry. That's a poor choice of words because disrupt is far overused, but I think it's going to make the process better going forward because people are having to adopt to the technology. It's been there, but there's been kind of a hesitancy to either trust it or learn it. And I think it's going to it could make the process even more seamless and faster because you don't have to wait. You don't have to wait to get an appointment. You can just people can sign it at 11 o'clock at night or 3 a.m. in the morning, sort of thing. There's no 8 to 5 anymore.
Yeah, no, that's right. And I guess, like you said prior to that, is that, the process itself previous, you'd like it to be able to say, oh yeah, this is an easy, seamless process. And it's, but it's a stressful process for clients.
It is.
Very rarely you go through that whole process that there's not like the client's calling you a few times, you're calling your lawyer, you're calling the realtors and stuff like that, and everything's moving so fast, and you got clients who are trying to schedule around working. So I think hopefully, like you said, that the technology will help, and this new norm will help our process for our clients as well, right? So
I think so. So I've just got a text here from Tanya. We're at the 30-minute mark.
Oh,
Maybe
wow.
We'll ask the audience if they have any questions for Jim. And if not, I have a couple of wrap-up points. So we'll give it a couple of minutes. Just use the Q&A function on the webinar to ask your question, and we'll pass it along to Jim. I guess some of my takeaways from our conversation today, Jim, is it is heartening to know that the industry is still active, and that you're busy every day, and our members are busy every day. So that's a good thing. Maybe not as busy as they were, but that's good. That technology is going to, in my humble opinion, improve the process for everyone. Because I'm sure you felt like, you don't want to have clients call you 50 times a day. I'm exaggerating a little bit there, but it may be hung up at the lawyer's office, for example, or somewhere along the pipe. There's a bottleneck, and I think the technology might ease that bottleneck up a little bit, which is nice. But I guess the biggest thing is, mortgage brokers have. You had mentioned earlier 30 plus lenders. I didn't even know there was that many lenders out there for mortgages. So that's kind of an impressive number.
There's more than that. I'm saying, in probably Atlantic Canada, we have access to 30 plus lenders, but
wow.
nationally, like I think if you looked on Dominion Lending site or some of the other brokerage sites, they might say 200 plus lenders. Now, some of these are, trust companies and stuff like that,
Sure.
mix and so forth,
Right.
and they may be general like to Toronto or Vancouver and stuff like that, privates, right?
So I have a question here. What is the best rate today for a variable rate mortgage? And are rates two-part question, are rates expected to go up or down in the next 12 months? So look into your crystal ball for the second part, and what are variable rates at for today?
All right. Well, variable rates didn't drop like that we thought they would. And what happened was the prime lending rate had dropped. The Bank Canada overnight rate, but not everyone gave the discount to the prime lending rate. So some lenders' prime lending rate, they might go prime minus, but the prime lending rate might be 245 or 295. And if I look at let's see here. Like I got one lender here that's on a rate sheet that has a prime lending rate of 295, where someone else's prime lending rate is 245. So they didn't give the full discount, right?
Wow.
Yeah. So prime, like right now we're seeing like maybe prime minus. I don't think you're probably going to find better than prime minus 0.2, 0.3 out there. It is roughly where we're at, prime 2.5. We're seeing more and more because of how close the fixed is dropping, that more and more people are going with the fixed. There's a little bit more security. If you can get 2.45 or 2.29 on a fixed rate, right? So in regards to rates, in regards to rates changing, I think what's going to happen is, and no one has that crystal ball, and
we're not going to hold you to this. It's just in your expert opinion. What do you think rates will do over the next?
That right now we're going to see rates pretty much kind of stay where they're at for the summer, and depending on how the opening of Nova Scotia does with employment, you can see low rates go right through the year, I think.
Sure.
Yeah, I can't see them they're trying to stimulate the economy, trying to get people the housing market and stuff like that. So I think that you're going to see that go right through to 2021 at fair low rates.
Well, that's good news. Good news for buyers.
Yeah.
So
exactly.
I have one final question, and again, I'm going back to this 30+ lenders thing. That quite frankly, I don't get surprised often, but that one does surprise me. So for a guy like me, just a regular Joe wanting to buy a home, how many lenders going through a mortgage broker would I have access to? Because I know some are for like investors. It's like some lenders deal specifically with investors, some are commercial. So how much would an average person, like going through a mortgage broker, how many options do they have for lenders?
So when we say we have access to 30 lenders, what happens is, as a broker, I'm going to build like a product shelf. Let's take for example, right? So if I have a client that comes to me and I look at that client, and so I look at their credit, their income, and you fit the ball, I'm going to say, okay, well, we're going to go probably where the easiest is to get done. Maybe it's time frame and rate consideration, right?
Okay.
So for a person in good credit situation, you'd have access to probably 20 different lenders, right? But maybe based on my suggestions and my advice, I'd say you may be better off going this route because they're a little bit faster. I like their service is a little bit easier. You're going to get good renewal rates down the road. The penalties that you may have if you were to break your mortgage not going to be as high as this lender, right?
Okay.
So that's the advice. So when we're dealing with a client, we don't send that file out to 20 lenders and hope we get a couple come back. We're going to use our expertise to say, okay, I'm going to review that. I know where this file fits, right?
Excellent. So, I mean, to me, that's exactly why I would use a mortgage broker rather than walk into the Royal Bank, hat in hand and say, please give me a mortgage. You have the negotiation skills. You have a you have your pantry, I guess. So I'll call it a pantry of lenders that you have access to. So yeah, you're able to do the negotiations on the client's behalf and work for their best interest. So yeah, that's
Exactly.
exactly why I think I would use a mortgage broker.
I'll give an example of one we're just dealing with now, and because I think realtors love examples, I know I do. It makes sense because you never know you're dealing with it. But we had a client coming from Ontario to PI, and they basically have a small pension, don't have a lot of income. Their debt ratios were over whack, but they had a good down payment. Not every lender is going to do this deal.
Right.
So we have a net worth program that we went through with one of our lenders, and everything fit. So we go way above 65% debt ratio, and we got approval on it, right? And so they're closing, probably in another week or two.
Awesome. I think I have one final question here, and then we'll wrap it up. So how common is it for lenders to charge high amounts for paying off mortgages early?
So it's going to depend on your lender that you're dealing with. And, we're hearing it's known that charter banks charge a higher interest rate differential penalty calculation than monoline lenders. Okay.
Okay.
So, and it also depends on where your currently rate is when you break the mortgage. If your rate is higher when you're breaking the mortgage than when you started off at, like if the current rates in the market are, chances are it's going to be based on 3 months interest. It's
Okay.
when you're in a declining interest rate market and you break your mortgage, that you're probably, and depending on the time frame remaining on the mortgage, you're going to have the interest rate differential calculation. So there's a number of variables involved in that. So time that's remaining in the term of your mortgage, if you took any specials or discounts with the lender. So charter banks, sometimes they offer some frills. So basically, or some incentives, cash back and stuff. That could be put in that equation as well.
Okay, awesome. Well, Jim, thank you so much for your time today. Certainly appreciate it. I certainly learned something, which is fantastic. Hopefully it was good information for our members as well. So thank you for your time. Very much appreciated.
You're welcome. And feel free to share my contact information. If anyone does have any questions, they can reach out to us.
Okay.
And what I would suggest to your association and the ones watching in that would be, reach out to a couple mortgage brokers, build that relationship, because it is always nice to have that option. I know you probably have some relationships built with some of your other lending partners, and you don't have to give them up, but it's always good to have other solutions and options for your clients.
Always good to have more tools in the toolbox. Exactly.
That's right.
All
Excellent.
Right. Thank you, everyone, for joining us today. Next week, as mentioned earlier, we have Andy Fillmore, MP for one of the MPs for Nova Scotia, joining us same time next week, 10 a.m. on Wednesday. We'll see you then. Thanks again, Jim.
All right. Cheers, guys. Thanks a lot.
Take
See you
care.
there.